Hey, have you paused your move because interest rates just felt too high? Well, I have some good news for you today. Home buying just got a little easier for many folks in a lot of places, and that might have changed your purchasing power. In today's video, we are going to break down what really is happening and what it might mean for your budget here in Charlottesville and the Shenandoah Valley areas. So let's go ahead and get started right now. Hey everybody, I'm Leslie Gleason along with my husband Stephen. We are Virginia Mountain to Valley Living. If you're new here, welcome. Stephen and I are local real estate agents serving the state of Virginia. We like to think we are Virginia's favorite YouTube agents, where we show you how our local real estate markets work. We also share with you some exciting things happening in our area, as well as places you may not know about and might want to visit. And if you wouldn't mind, we really encourage you to tap that subscribe button as well as that bell icon so you don't miss any of our video updates. We post a couple of videos every week, just enough to keep you informed without driving you crazy. So let's jump into our two main topics. Yep, just two main topics for today: mortgage rates and home affordability. At the time of this taping, we are still experiencing a government shutdown, but interesting enough, home affordability is improving. That doesn't mean it's suddenly cheap to buy a house, but it does mean we are starting to see a trend. And there are two big reasons why. One, mortgage rates have eased off. At the time of this taping, we are seeing mortgage rates as low as 6.13%. The other reason, number two, is the cooling off of home prices. Price growth has cooled in some places, making homes not cheap, but more affordable. So if you put these two trends together, home buyers are getting a little more breathing room. What does this mean for your dollars though? So let's break this down into real dollars so you can see the difference this might make for you and your move. Let's say your monthly payments are coming down. One of the clearest signs of this shift is in monthly payments. The latest data from Redfin shows mortgage payments on a medium-priced home are now about $283 lower than they were just a few months ago. On a medium-priced home, the typical mortgage payment is about $283 lower, so that's roughly about $3,400 a year back in your pocket. Redfin also shows the median payment has slipped to roughly $2,600, which is a $200 plus below the peak earlier this year. Translation: real relief. Even if it's not a huge shift, every dollar counts. Here's another way to see it. If your budget is $3,000 a month, that shift in rates can lift your price range by about $20,000 to $22,000 compared to midsummer. That extra cushion might make the difference between a house that is almost right to, hey, this is the one. Maybe you're asking, why is this happening? Well, rates cooled a bit. This happens when investors feel cautious. When that happens, they buy bonds, which in turn tends to pull mortgage rates down. By the way, don't believe all the hype you hear on the news. Fixed rate mortgages aren't set by the Fed or Federal Reserve. Mortgage rates are influenced by the bond market, especially mortgage-backed securities. In addition, currently home prices aren't racing, and in many markets, price growth has slowed, which helps the math for buyers. As ICE Mortgage Technology, which is a software company that provides services to automate and streamline the mortgage process, they put it this way: the recent pullback in rates has created a tailwind for home buyers, meaning affordability is at a 2.5-year high. Your next question may be, is this happening in our market here too? Well, here in the Shenandoah Valley and Charlottesville area, every neighborhood has its own rhythm. Condos near downtown Charlottesville price differently than a single family home in Fishersville or Stewart's Draft. But the national tailwind still matters. If your numbers were tight in June, they may look better today. Sometimes they may look just enough to tip your home buying from a no to a maybe. Here's a pro tip though. Don't shop by headlines, okay? Shop by your payment and your timeline. A few $100s can widen your search and help you land a home that you will love. Let's do a quick reality check though, okay? Will rates go even lower? Maybe. Sorry, my crystal ball's not working right now. But there's always a trade-off. If more buyers jump back in, competition may heat up again, and prices in some locations may go up. If the payment you want is available right now, it can be a smarter time to move and maybe refinance later if rates drop again than to sit on the sidelines. I don't want you to sit on the sidelines and watch your favorite homes get scooped up. Here is what I encourage you to do this week. If you are looking to jump back into the housing market, or if you are just beginning, here's a simple 4-step checkup. There's no spreadsheets needed. So let's go to number 1. So rerun your numbers. Ask your lender for an updated quote as of today's rates. Have them price 2 lock lengths. Yep, 2. 30 versus 60 days. And then I want you to figure out 3 terms. Ask your lender for 3 terms. A 15, a 20, and a 30-year mortgage. So if you price the 2 lock lengths, 30 days versus 60 days, and 3 terms, the 15, the 20, and the 30-year, they may give you some better numbers right now. Number 2, set your payment target. Pick a monthly number that you can live with that drives the plan, okay? So let's find out what your monthly amount that you want to do. Number 3, I encourage you to widen your search. So with a little more buying power that you may have, I encourage you to peek at homes $15,000 to $25,000 above your old max. You may find a better layout and a shorter commute, and who knows, you may find the one just by opening up your search range. Number 4, lean on local. Call, text, or email me. Tell me your payment goal and where you want it to be. I'll put some real homes that fit it now, not in theory, but now. Lastly, who is going to benefit the most right now? That's going to be first-time home buyers. That $283 swing can cover utilities or insurance or a starter furniture budget. Buying it after you move in, not before. The other people that will benefit from this shift are move-up buyers. If you outgrew your place, the extra $20K to $25K in purchasing power per the life is, it may unlock you, and it'll unlock your purchasing power. So it may mean the difference between a 3-bedroom to a 4-bedroom or a larger yard that you need. So anyone who pressed pause in June, if you were a near miss then, you might be a yes right now. Bottom line, affordability is improving, and that resets the math on your move. Even if it's just a turn not yet into let's go. If you're in Charlottesville or in the Shenandoah Valley, let's run your numbers together. I'll show you real homes that match your payment and will map the smartest way to buy in this market. Don't forget that all of our contact information is in the description below this video. Don't hesitate to reach out to us. If you like today's video, please like it and share it with someone else who you know could maybe benefit from our videos. We really appreciate your watching. But until next time, I'm Leslie, and I look forward to seeing you around town.